So I will be presenting the introduction part. So the exchange rates are crucial indicators of a nation economic health, impacting trade, investments, and financial policies. So in Indonesia, the value of the rupiah, Indonesian ringgit, against major currencies like the US dollar is shaped by a combination of domestic and global factors. So these factors influence the stability and the trends of the rupiah. So reflecting the country's economic performance and its position in international markets. So understanding these factors is essential for analyzing Indonesian exchange rate dynamics and their implication for the nation's economic.
Hi, my name is Nur Rishad. So today I would like to share one of the factors that influence exchange rates, which is inflation rates. So inflation is a critical factor influencing exchange rates. A lower inflation rates in Indonesia compared to other countries typically result in an appreciation of the rupiah. This occurs because lower inflation indicates that the purchasing power of the rupiah remains stable over time, making Indonesian goods and services relatively more competitive in the global market. As a result, demand for the rupiah increases as foreign investors and trading partners seek to capitalize on Indonesia's stable economic environment. Moreover, a low inflation rate signals effective monetary policy and economic stability, further boosting investor confidence. Conversely, high inflation erodes the value of the currency as it reduces purchasing power and increases uncertainty, leading to potential depreciation of the rupiah in the foreign exchange market. By maintaining a competitive inflation rate, Indonesia can attract foreign capital, strengthen its trade balance, and support the overall stability of the rupiah in global markets.
Hi everyone. Today I'm going to present about the interest rate of Indonesian rupiah. So, firstly, interest rate play a critical role in attracting foreign investment. High rates offer better return for investor, particularly in government securities and deposit, increasing the demand for the rupiah and appreciating its value. Conversely, low rates may deter foreign capital, leading to a depreciation of the currency. Okay, so for the secondly, Bank of Indonesia use interest rate to control inflation. Maintaining stable inflation boosts public confidence and strengthens the rupiah, ensuring exchange rate stability. Next, global interest rate trend also impact the rupiah also. For example, if major economies like the US raise their rates, global investors might redirect their capital there and weakening the rupiah. Finally, interest rate influence economic growth. High rates can reduce borrowing and spending, slowing growth but strengthening the rupiah. Low rates encourage borrowing and spending but may risk inflation and currency depreciation. Okay, so that's all from me. For my part, I'm going to pass to the next presenter. Thank you.
Hi, Assalamualaikum. My name is Nur Farahin and I'll be talking about recession. A recession is a period of economic downturn characterized by reduced production, declining consumer demand, rising unemployment, and decreased company investment. In Indonesia, a recession can significantly impact the value of the Indonesian rupiah. During a recession, economic activity declines and businesses and consumers spend less. This leads to lower demand for goods, services, and consequently the rupiah. For instance, global economic struggles reduce demand for Indonesia's key exports such as textiles, coal, and palm oil. As overseas buyers require fewer Indonesian commodities, the demand for the rupiah in international market declines. Recession also affects the foreign direct investment. Investors seeking higher returns often pull their funds from recession-hit economies, especially emerging markets like Indonesia. This outflow of capital, known as capital flight, reduces the demand for the rupiah, causing its value to drop further. Additionally, economic uncertainty discourages foreign investors from investing in Indonesia, key sectors such as manufacturing and mining. The central bank monetary policy also plays a role. To combat a recession, Bank Indonesia may lower interest rates or implement quantitative easing to stimulate the economic activity. While these measures can boost the economy, they often reduce the attractiveness of the rupiah to foreign investors, leading to the currency depreciation. Lastly, Indonesia's reliance on exports makes it vulnerable during global recessions. Falling commodity prices and reduced export revenues can result in a trade deficit, further weakening the rupiah as more local currency is converted to foreign currencies. In summary, a recession in Indonesia can significantly weaken the rupiah due to reduced export demand, declining FDI, and central bank policies designed to revive the economic growth. So that's all from me. Thank you.
Hi, today we explain about the government debt. So the government debt plays a crucial role in shaping exchange rates. When a country has high level of government debt, so it can reduce investor confidence. This may lead to the currency depreciation as investors fear the government may struggle to repay its debt, or inflation may rise due to the excessive borrowing. So in Indonesia, the government debt stands at around 39.8% of GDP as of 2023. This is considered moderate by international standards, allowing the country to maintain some stability in its currency. The rupiah, however, Indonesia is borrowing heavily for large-scale infrastructure project, while this investment could boost economic growth in the long term. So the rising debt level creates concerns about the sustainability of the country's fiscal policies. For the example, if debt continue to grow unchecked, it could lead to the inflationary pressures, eroding the value of the rupiah. So compared to the other countries such as Argentina with a much higher debt to the GDP ratio of 89.8%, high debt has caused significant depreciation. So in contrast, Singapore with a high debt to GDP ratio of 131.4% has maintained a strong currency due to the effective debt management and high investor. So while Indonesia moderate debt allows for some stability, careful management is the key to ensure that the rupiah does not face the long-term depreciation.
So, for the conclusion, Indonesia's exchange rate dynamics are influenced by a combination of domestic and global factors. Key drivers include inflation rates, interest rate trends, economic growth, foreign investment, and even government debt levels. A low inflation rate and economic stability enhance the rupiah's strength by attracting more foreign capital and increasing investor confidence. So conversely, economic recessions, high inflation, or even excessive government debt can lead to depreciation, reducing purchasing power and international competitiveness. Effective monetary policies by Bank Indonesia, including interest rate adjustment and quantitative easing, play a crucial role in mitigating adverse impacts during economic downturns. So here are some of the recommendations. Firstly, to maintain stable inflation, Indonesia must continue implementing effective monetary policies to keep inflation rate low, enhancing purchasing power and attracting foreign investment. Also, to diversify export markets, Indonesia must reduce dependency on commodities like coal and palm oil by expanding into high-value industries such as technology and manufacturing to buffer against global demand fluctuations. And last but not least, is to strengthen the economic resilience. So Indonesia must enhance domestic industries and workforce capabilities to mitigate the effects of global recession and supporting stable economic growth. So that's all from us. Thank you.